Welcome to your own channel, Romance with Finance, a brand of Financial Freedom Hub. On this channel, you get the videos and information related to personal finance.
Love to read books? Go and grab this book on mutual funds. Click on the below link and grab your copy today.
Imagine two houses. One is worth 50 lakh rupees and the other one worth 1 crore rupees. Which one is the better investment? Most people would say the house which worth 50 lakh. However, can you really decide just by looking at the price? Of course not. You would first want to know how big is the house, where it is located, what's its condition, how much rent can it generate, how fast is it value growing. Now let me ask you another question. Suppose you're choosing between two mutual funds. One has an NAV of 25 rupees and the other has an NAV of 250 rupees. Which one would you buy? If your answer is the rupee 25 fund because it's cheaper, then you're making the same mistake as judging a house only by its price. Today we would be understanding about the pricing concepts in the mutual funds, which is also known as its NAV, that is the net asset value. Along with that, we will also understand how your investments gets converted into units and why a lower NAV does not mean a better mutual fund. NAV stands for net asset value. Let's understand the name. Net means the final value after considering everything that needs to be accounted for. Assets refers to the investments held by the mutual fund. Value simply means what those investments are worth today. Together, net asset value represents the value of one unit of a mutual fund. Think of its way: when you buy the stocks of a company, you receive shares. Similarly, when you invest in a mutual fund, you receive units, and every unit has a value. That value is the net asset value, or simply NAV. Let us understand this with a simple example. Imagine five friends decided to order food together. Each contributes 1000 rupees. Together, they now have 5000 rupees. Instead of buying just one item, they purchase pizzas, burgers, desserts, and beverages. Now, no single person owns an entire pizza or a complete burger. Instead, everyone owns a proportionate share of the entire meal according to their contribution. A mutual fund works in the exactly same way. Thousands of investors pool their money together. The fund manager invests that money in different securities. Each investor owns a proportionate share of the entire portfolio. That ownership is represented through units. Now, how do you get these units? Whenever you invest in a mutual fund, you don't buy shares of the asset management company. Instead, you receive mutual fund units. The number of units you receive depends on the net asset value, that is NAV, on the day your investment is processed. Let's understand with a simple example. Suppose today's NAV is 50 and you invested 1000 rupees. So 1000 divided by 50, that means you will receive 20 units. Now suppose after some time the NAV becomes 55. Did you receive any extra units? No. You still owns 20 units that was invested back then. Only the value of those units has changed. Similarly, whenever you redeem your investments, the amount you receive depends on the applicable NAV on the day of redemption. In our example, you invested 1000 rupees at an NAV of rupees 50 and you got 20 units. Now imagine after some time the NAV becomes 55 and you decided to redeem your investment. Although you still owns the same unit, 20, however, this time those 20 units are valued at 55 each. Back then it was valued at 50 when you invested. So the amount you receive on redemption would be 5 rupees extra that would be considered as your profit in the mutual funds. In simple words, you invest at an NAV, you redeem at an NAV. The only difference is that the NAV at the time of investment and the NAV at the time of redemption may not be the same. That's how your investment value changes over time. Now, does that mean that once your investment starts growing, it will continue to grow every single day? Not necessarily. If you have been following Romance with Finance for some time, you might remember our video series where we compared the behavior of investors and the behavior of asset classes, that is, investments, with the behavior of birds, animals, and insects. One of those examples was the snake. A snake rarely moves in a perfectly straight line. It moves in a zigzag pattern before reaching its destination. At times, the stocks also moves in same pattern. Because the stocks are the underlying assets in the mutual funds, hence that also impacts the NAV, and the mutual funds NAV can also move in a zigzag pattern. It can rise, it can fall, or it can stay in a similar range. And obviously, the financial markets often behave in a very similar way. They don't move straight up or straight down. There are ups, there are downs, there are corrections, there are recoveries, and at times they are just not moving at all. They are in a range. Since a mutual fund invests in the securities whose prices keep changing, the value of the mutual fund's portfolio also changes. And because the NAV reflects the value of that portfolio, the NAV, that is net asset value, also moves in a similar manner. Markets don't directly determine the NAV. The NAV of a mutual fund scheme is determined by the value of its portfolio, and the value of that portfolio is, in turn, determined by the market prices of the underlying assets, whether they are stocks, gold, fixed income instruments, or any other investments held by the mutual fund. For equity funds, underlying assets are equity shares, that is, stocks. For debt mutual funds, underlying assets are debt instruments such as Provident Fund, Public Provident Fund, fixed deposits, recurring deposits, debentures, etc. For gold mutual funds, gold is the underlying asset. A temporary fall in NAV doesn't automatically makes a mutual fund bad. A temporary rise in NAV doesn't automatically makes a mutual fund a good investment. What's important is not just noticing that the NAV has changed, however, understanding why it has changed. And that's exactly we will uncover in our forthcoming videos. Stay tuned.